traders, welcome back to Fighters Trading Channel, and we are back again with another weekly flows video. Today is Saturday the 17th of May, and I decided to just drop this video a little bit early as I will be tomorrow for Sunday. I will be busy tomorrow for Sunday. And this video will be an analysis for the week ahead from the 19th of May, the Monday the 19th of May onwards. So without further ado, let's hop into the charts and see what we can see. Starting with gold, what we can observe with gold on the monthly time frame is that we still have a small bearish body at play, and we do have a wick rejection to the downside as well as the upside. So it's created a bit of a spinning top pattern at the moment. With the markets currently in a retracement on the lower term time frames, what we can observe is that price hit the overextended level on the RSI at 85, and we are very far removed from the 50 SMA. These confluence just add to the idea that this market, although been moving super bullish at the moment due to fundamental sentiment, market sentiment coming out with investors looking at gold as safe havens, this market is still overextended. There's been a lot of movement to the upside and not a lot of liquidity to the downside. Thus, we are in need for a deep retracement to collect the liquidity so investors can get in, take their profits, and can also get in at a discounted zone and trade that to the upside. Now, I just observed that my charts are offline. Let me just get that back up and running. But from what we can see at the moment, the two wick rejections coming out of the monthly candles do indicate some sort of resistance at this particular level, with markets having a hard time breaking that 3,500 level. So there is a retracement imminent, a bearish retracement imminent, which could play out for the medium term. But of course, we have to wait for the markets to give us a signal. Going down into the weekly time frame, we can see a little bit more of a consolidative factor, where markets in the coming weeks had pushed up, came back down, provided us a lot of wick rejection to the upside, but still seems to be settling just above the 3,200 level. It's having a hard time breaking that level of support, despite being in that overextended territory for a while. So my observations on this is I'm waiting for price to get down into that sweet spot region, test said region, before pushing to the upside. Now, on the weekly time frame, potential areas where the sweet spot could occur could be just below 3,000 at about 2,950. We could potentially see it at 2,750. However, we also need to be cognizant of how far removed price is from the 50 SMA at the time. So it would still very much be a guessing game. I think from that logic, the 2,750 mark may be a bit ambitious, but definitely 2,950. If price gets down there, I'm going to start looking for buying opportunities, especially if I see price settling within that sweet spot region between 45 and 55 on the weekly time frame. So we are still awaiting the break of consolidation to confirm that the bears are taking some sort of control here. But for the most part, this market is just collecting liquidity, and we've seen it collect liquidity in the past and just push higher, and it can push higher from said level. I do believe we are in need of a deeper retracement though. On the daily time frame, what we can observe is price trading very close to the 50 SMA. We are in the sweet spot region of the RSI, but we can also observe that despite the bullish structure that we do have here, we are seeing a double top pattern, a break of this particular level here in the M pattern. Of course, price did close above it during the week, but we did see a break below, a test back up. So it's giving us bearish signs, but the bullish structure is still very much intact. So where do we go from here? Well, I would need to wait for this market to play out. I think we are in an inflection point, and investors could go either way from this position. They could choose to say, hey, we're getting more money out of indices. Let's take our money out of gold, keep being risk on, and invest in indices. Thus, gold price drops further. Or we could see investors saying, hey, there's still a lot of instability coming out of this tariff announcement, coming out of the US. Indices may not be the safest option. Let's keep betting on gold. And in this case, the markets will go up. So from a daily perspective, I'm actually going to be laying out of this market. I think I need to wait and see what happens. And we will observe what happens next week upon the support level. I would need to see price move a little bit further away from the support level to confirm market directionality in at least the medium term to start taking solid intraday trades. So that is our analysis on gold. Let's move on to US tech. Just to observe as well, we can also see the future price of gold is below the current price of gold. And this just also indicates the fact that the futures is bearish versus current price of gold. It's lower than the current price of gold. So it means we could potentially see further downside movement from that. And we are about, I'd like to say 18 points, 17 points removed from that position. So it would be interesting to see how that plays out. But moving on to indices, as we can observe on the monthly time frame, we have that massive wick rejection, as we've stated in previous videos, from April. And we have a full-bodied bullish candle, which just confirms that the bulls are in firm control of this market again. Now, we are trading comfortably above the 50 SMA, and we are in the bullish region of the RSI, above 55 but below 70, which is great. It means we are seeing further bullish movements in this market. Coming into the weekly, we can observe that price this week has broken above the 50 SMA here, traded comfortably to the bullish, to the upside. We are back in the bullish territory of the RSI, above 55, below 70. And it is clear that the support definitely provided a jump start to get the bulls back on track with this market, and the bulls are in firm control. So we are looking for long positions from this market. Upon the daily time frame, we can observe that the market last week opened with a gap up, and it actually gapped up the previous lower high that was created in the bearish structure right there. So this is now a support zone. It is gapped up. I'm actually going to delete it. It is no longer valid. But price can still come back and potentially test the support at 20,187. So price can come back down, test that level, and push further up. We haven't seen any test of that happen. I mean, we had a massive move on the Monday, and then you can see momentum kind of died out throughout the week per the daily time frame. We can see that we had strong momentum Monday, moderate momentum Tuesday, Wednesday barely anything. We had a spinning top bullish pattern on Thursday, and then Friday it was just a doji. It was just a doji. So my expectation is this market's going to come back down. It's going to retrace potentially back down to the 20,187 level, and then provide us a discount zone to take further long positions from there. But for the time being, what we can observe is that price is trading comfortably above the 50 SMA, which is currently putting on a bit of a curvature to the upside after the massive bearish move. We are in the overextended territory of the RSI, currently trading at 70. So I would expect prices to retrace, come back within the sweet spot region, and then push up from there. So I'll be awaiting the movements within this market, and I would be awaiting that long position. I will not be looking to take any retracements on the short, take any positions on the retracement move of the short position. So my ideology, my strategy for this market is just to wait for the discount zones to take further long positions. And by the time that takes place, I'll be comfortable in my assumption, I'll be comfortable in my strategy, and I will just wait a signal upon the 20,180 level on a lower time frame, preferably 15-minute or 5-minute. Moving on to US 30, let's see what we can see here. So US 30 on a monthly time frame. Also per April, we had a massive bullish pin bar pattern with a strong wick rejection to the downside. And this month, we are seeing a very strong full-bodied bullish candle currently being formed. Now, we still have 13 days to go, but for the most part, it looks like the bulls are getting in control here. We are trading comfortably above the 50 SMA. We've tapped the sweet spot region on the monthly time frame for RSI, and we've turned around and prices keep pushing higher, which makes sense. On the weekly time frame, we can see prices finally above the 50 SMA again with the last close. We are moving into the bullish territory of the RSI, currently within the sweet spot region, but with no sign that the market is going to turn around. So I expect this to keep going higher before retracing back into the 45-55 region of the RSI and then pushing further up. So we are still very bullish on this. It's clear that NAS and US30 are following very similar market structures at the moment. And then on the daily, we are above the 50 SMA. We have approached the previous high, a lower high of the bearish trend, as we can observe here. Price not really showing too much of a reaction to it, just sitting on this level. And what we can observe per the daily time frame is price trading above the 50 SMA. We have bullish structure with the bullish support trend line, respective higher lows and higher highs, and price trading in the bullish region of the RSI. Now we can see that price made less of a bullish move than NAS 100 did this week. We had a strong bullish push on Monday due to the China and the US lowering both their tariffs for each other, which brought some stability back into the market. It allowed investors to go into that risk-on territory, and that's the reason why gold dipped while indices increased. But it's surprising to see that on Tuesday and Wednesday that we actually had a bit of a retracement. And even Thursday and Friday, while we have better moves than NAS 100, it's still very moderate moves. And we are still sitting below the lower high structure, resistance structure that was created at 42,600 and 42,600. So I'm still awaiting a finalization and waiting to see what this market does. But for the most part, I'm still bullish on it. I'm still looking for long positions. I'm just waiting for a clean break off that lower high. And we could potentially first see a retracement towards a discount zone to collect liquidity, enough liquidity, before we see a break above this resistance level that we currently have at play. But with the strength of the bullish trend line that we have at play, where the 50 SMA is, currently where the RSI is residing, I don't think it's going to move too much further down, potentially just to 41,800, which is a break and retest level. Come back there, collect liquidity, and then push higher. So I will be continuing to look for long positions within the US 30 markets. Before I go on to currencies, I just want to take a look at the VIX index. And as you can see for this week, the VIX index closed at 17.25, well below 20, well within the risk-on territory. So we are expecting further upsides for indices and downside for gold. As it stands, I mean, if the week opens and we're back in that neutral territory, we'll have to reevaluate. But for the most part, it looks as though investors are comfortable taking some risks. They are comfortable getting back into the market with the stability that is provided with the reciprocal tariff war being on pause. So from that perspective, indices going up, gold going down. Moving on to Euro USD. So I haven't been trading currencies that much, but let's just observe what we can see. So for the month, we are down despite the massive bullish candle we had on the previous month. Per the weekly, it appears that we are in a retracement. We are trading comfortably above the 50 SMA, and we are in the bullish territory of the RSI. We see massive bullish structures currently at play on the weekly time frame. Per the daily, we can observe a bit of a triangle formation currently at play. We're very close to the 50 SMA at the moment, and we're consolidating within the sweet spot region of the RSI. Just taking a look at the daily candles that we had during the week. We opened the week with a bullish dollar push. So you can see that the bears took control here. But then Euro just came back on Tuesday and was like, nah. You had your day. Your news was announced, but we're taking control back. After they did that, it seems that price just found fair market value here and just closed with a whole lot of indecision candles for the week. My expectation is that the bulls are going to continue pushing this market higher. We could potentially see a break of this level, but we need to see some sort of news event, news release, or just money coming into the market to create the momentum that will then create the market directionality. So at the moment, Euro USD is currently stagnant, and we'll have to wait and see what happens. Oh, Euro JPY. Okay, this has been a fun one. So for the month, we had a push up, we had a push back down, and we're currently closing with a bit of a bearish pin bar at play. It's very much indecision candles. Structurally, though, we are still bullish. We can see that the support level at 155 is holding steady, and we are trading in the bullish territory of the RSI. Moving into weekly, so a lot of indecision in the weekly in terms of the indicators. As we can see, price is constantly just testing these indicators, testing the RSI, but not really going anywhere. So this is not a clear indication of market directionality, but what we can observe is that there is clearly broad range consolidation taking place. So boom, let's turn that red. Let's turn this blue. Okay, so broad range consolidation between these two levels at 165.00 and 155.00. So price currently consolidating between those two zones. We've tapped the resistance, so I'm expecting further downside movements into the coming week. Per the way the candle for the week closed, we can see massive bearish pin bar there, so I'm expecting further downside movements during the week, thus yen strength. On the daily time frame, we can observe that price is trading above the 50 SMA at the moment after tapping that weekly bearish resistance trend line, bearish resistance line. We can see that the price is moving down. We have massive bearish signals here. So my indication is that once price breaks the, I want to say 161.664 level, breaks that, comes back, retests, pushes to the downside, I'll be looking to take the short position off that retest right there. We'll be below the 50 SMA, and we'll also be in the bearish region of the RSI, which will just add confluence to my strategy. I may take a runner position for a short trade just to confirm momentum and market directionality. But of course, we'll have to wait till Monday, see how the markets open, and then trade accordingly. USD JPY, very much just stagnant. I'm not looking to trade this market at the moment. We can see that the weekly time frame, we are bearish. We're trading below the 50 SMA, and we are in the bearish territory of the RSI. We close the week off with a bearish pin bar. But yeah, in terms of the daily, there's conflicting signals being given because we are breaking above the 50 SMA here. We are breaking into the bullish territory of the RSI. So due to those conflicting signals, I think that's why I stayed out of it this week. It's just very, very confusing. Markets going up, pushing higher, then pushing lower. So for the most part, I would like to believe that the bulls are in control. However, I would need to wait for the market to actually play out and confirm market directionality because as it stands, I still think the bears can firmly continue the downtrend that we are seeing, and that was propositioned per the 50 SMA line and the bearish trend line that we currently have at play. We did break this bearish trend line, thus that's why I say we have potential to push to the upside, but that's why we need to wait for the market to open and actually observe what happens then. In terms of the DXY, so dollar index pushed higher, currently testing 50 SMA in the bullish region of the RSI, but hitting resistance at 101.53, which is a break and retest level. I think this market is going to drop, but of course we need some sort of fundamentals coming in to prove that this market is going to fall further. In terms of the Euro index, I did expect it to push up last week, but it still kept moving lower due to the gap down when the markets opened. I would like to see that this is respected, this 50 SMA is respected, and we do push to the upside, but of course, I'm going to wait and see what happens. Oh, so the dollar index definitely opened with a strong gap down on that Monday, broke the bullish support trend line at play. Could potentially see further downside movements here. We did recover for the most part, but I still think that there's some bearish potential. Yeah, so we'll have to wait and see what happens and how it plays out. Fundamentals for the week. Let's take a look at what's happening. All right, so what we can see for fundamentals for the week is that we have a lot of AUD and CAD news, some Euro news on Thursday, the 22nd of May, pound news on the day, USD news on the day for PMI. So lots of PMI releases. So pretty much a technical trading week ahead, except for Thursday, which is fundamentally driven. So the reason why I wanted to drop this video early is I want to actually do a fundamental video, a fundamentals video this weekend, and I will potentially have that released by tomorrow. But with that, I hope you enjoyed the analysis. I wish you all a very, very successful trading week next week, and I'll catch you in the next video. Cheers, everyone.